Hi, everybody, and welcome to our webinar today, Credit Building in Canada, Explained for Newcomers. My name is Abigail Kingswood, and I work with partners here at CanadaVisa, and I'm very excited to have you all here with us today. We're going to start this webinar with a presentation by our guest from TD, and then after that presentation, we'll move into our question and answer period. And we've had a lot of really strong questions submitted by you prior to the webinar, and we're planning to answer as many of those as possible. And as well, we will be monitoring the chat throughout the presentation, pulling out your questions and trying to get to those too. So make sure that you're answering your questions as we go. We won't talk to them right as you ask them, but we will be noting them down. So now I'm very happy to introduce our guest speaker today, Sierra Wong. Sierra is a product owner at TD dedicated to revolutionizing financial services through forward-thinking and customer-centric solutions. With a dynamic career at TD since 2010, Sierra has advanced from branch banking roles to leading strategic product initiatives. Her experience spans market intelligence, product innovation, and credit card portfolio management, consistently delivering measurable business impact and award-winning projects. Notable achievements that she's worked on include launching breakthrough initiatives such as Simple Start, Samsung Pay, TD My Advantage, and the transformative MB&A portfolio refresh, each of which has elevated the customer experience, enhanced operational efficiency, and driven robust profitability. Outside of work, Sierra enjoys playing ping pong with friends and is excited to be a new Blue Jays fan and hopefully still a fan. Please remember that the chat is public, so don't share any personal information in the chat as that will be removed, but I do recommend, as noted, that you ask questions throughout. So I will now pass it off to Sierra for our presentation.
Thank you so much, Ab. So good morning, everyone, and welcome. Thank you so much for joining today's webinar. My name is Sierra, and I'm delighted to be here with you as you begin your journey in Canada. As someone who has experienced the excitement and the challenges of settling in a new country, I understand how important it is to feel confident about your financial future. Today, we're going to talk about a topic that is essential for building that future: credit. So building credit in Canada isn't just about getting a credit card or a loan. It is about creating opportunities for yourself and your family. Whether you are hoping to buy a home, finance a car, pay for school, or simply managing day-to-day expenses, understanding how credit works will help you to make informed decisions and open doors to new possibilities. Credit is more than a financial tool. It's a way to demonstrate your reliability and responsibility to lenders, landlords, and even employers. So by learning how to use credit wisely, you'll be able to establish a good, strong credit history, which is one of the fastest ways to build trust and access the resources you need in Canada. So throughout this session, I will share some practical tips and answer your questions about credit. So please hold your question until the end, and we'll make sure everyone leaves with the information they need to succeed. Let's get started on this important topic together. So let's take a moment to demystify credit cards. Something many of us use but few truly understand. Imagine a credit card is a helpful tool. It's like having a short-term loan in your pocket. You can borrow money for purchases and then pay it back, usually on a monthly cycle. Every credit card comes with a spending limit. That is the maximum limit that you can use. If you go over that limit, your transaction may be declined or you could face extra fees. So it's important to keep track. If you don't pay off your full balance at the end of each month, you'll be charged interest on what you owe. Interest rates can vary, so it's wise to talk to an advisor to find the card that fits your needs. Remember, you have a grace period after your billing cycle to pay off your balance. Check your statement for the exact date. If you needed some cash right away, you can use your credit card at an ATM machine for cash advance, but just be aware the interest will start building right away. Beyond borrowing, the credit card can offer perks It has cashback, rewards, exclusive discounts, and protection against unauthorized transactions. Most importantly, using a credit card responsibly is one of the best ways to build your credit history in Canada. We'll talk more about credit history later in this session. So let's talk about why having a credit card can be a smart move, especially as you settle into life in Canada. So first of all, ask yourself, is the credit card right for you? If you are someone who lives within your means, has a steady income, doesn't struggle with overspending, and can stick to a budget, you're already on the right track. Now, what makes credit cards so useful? For starter, you often it is often safer than carrying cash around. You can earn rewards and cashback without changing your spending habits, like the cherry on the ice cream. You can track your expenses, become much more easier, helping you to stay on top of your budget. And here's the big one. Using a credit card responsibly is one of the quickest way to build your credit history in Canada. So if you're ready to manage your money wisely, a credit card can be a powerful tool to help you to reach your financial goals and open up new possibilities. So now let's dive into the world of interest. Here's the demonstration. So if you don't pay off your credit card balance in full by the due date, interest starts piling up on whatever you still owe, and it keeps adding until you pay off that balance completely. The interest rate you pay isn't always the same. It really depends on your bank, the type of credit card you have, the kind of transaction, and even the province that you live in. The good news is for new purchases, you usually get a minimum of the 21-day grace period, where you wouldn't be charged for any interest unless there is a cash advance or a balance transfer. So if you pay off your balance before that grace period ends, you avoid paying interest altogether. So understanding how interest work can help you make smarter choices and keep your money in your pocket. So let's break it down into detailed calculation to show how a credit card really works. So using a very simple example, let's say that you have a credit card with a $1,000 balance and there is an annual interest rate of 20%. Then your daily interest rate would be approximately 0.00055%. It may sound really tiny, but it does add up. Each day, you'll be charged about 55 cents in interest. Over a month, it is roughly $16.43 just in interest charges. Now, here's something that surprised a lot of people. If you only make the minimum payment on that $1,000 balance, it could take you almost 11 years to pay it off, and you would end up paying an extra $990.60 in interest alone. So the takeaway is paying more than the minimum or paying off your balance in full whenever you can. Save you a lot of money in the long run. So then let's talk about something that's truly in your control, your credit rating. The way you manage your money every day shape your credit history. And the more you know about what goes into a good score, the easier it is to build one and maintain one. So how can you keep your credit history healthy? Here are some practical tips. So you always pay your bills on time. It is one of the simplest way to show that you're reliable. Try to pay more than just the minimum on your credit card whenever you can. Even a little extra goes a long way. Be careful about applying for new credit too often. Frequent requests can make lenders think you're having trouble managing your money. Start building your credit history early. Using credit card responsibly is actually better for your rating than having no history at all. And remember, avoid using one credit card to pay off the other. That cycle can be tough to break. By following the steps, you're not just building a credit score, you're building trust and opening doors to new opportunities in Canada. So let's talk about your credit score. How is it being calculated and what does it mean? So the credit score is a three-digit number. It is a snapshot of your financial reputation. Lenders use it to design how trustworthy you are when it comes to borrowing money. But here's something very important. Your credit score isn't set in stone. It changes as your financial situation changes. So you have the power to improve it over time. What goes into your credit score? It is based on several factors. One is how well you pay your bill on time. Payments makes a big difference. The amount of debt that you have, keeping the balance low is a good thing. And how long you have had credit, longer history can help. And uh, how much of your available credit you're using, try not to max out your cards. And how often the lender checks your credit. Lots of inquiries can raise red flags. And finally, the public record. Any public records like bankruptcy or collections can impact your score. Understanding these factors means you can take steps to build and protect your credit score, opening up more opportunity for you to manage it and improve it. So now let's talk about the two main types of credit cards you might consider as you start building your credit history in Canada. There's secured credit card and unsecured credit card. So what's the difference? Both cards look and work almost the same, but here are the key distinction. With a secured credit card, you put down a deposit with the bank, and your credit limit is equal to that deposit. It is a great way to get started if you're new to credit or if you want to rebuild your score. An unsecured credit card doesn't require any deposit. You simply apply, and if approved, you get a credit limit based on your financial profile. So no matter which option you choose, both secure and unsecured credit card can help you to build a positive credit history and credit rating in Canada. It's all about using them responsibly and making payments on time. Next is let's talk about other catches people that catches people by surprise all the time, which is the credit card fee. Beyond the annual interest rate, there is a few other charges you should also know about. One is the annual fee. Some credit card comes with a yearly fee, especially those that offer special rewards or points. Think of it as the price you pay to unlock extra benefits. There is a cash advance fee. If you ever use a credit card to get cash from the ATM, you will need to pay a fee each time. Plus, the interest start building up right away. There is an over limit fee. If you spend more than your credit limit, you may get hit with an over limit fee. So it's a good reminder to keep an eye on your balance. There's also a foreign exchange fee. So if you're planning to travel or shop online from another country, then when you use your credit card to pay for those foreign purchases in foreign currencies, your bank may charge a conversion fee and apply their own exchange rate. So knowing all this fee can help you to choose the right card and avoid unexpected costs. For example, like if you wanted to purchase something in US, then you may want to consider the US dollar fee that will save you on the foreign exchange fee. If you ever have any question about your credit card fee, do not hesitate to ask your financial institution for more details. After all, we have exploring many type of like elements of credit card. You know, the type, the fees, and how to build a good credit history. You may be wondering, so you still get a credit card? If you feel confident that you can use a credit card responsibly, it can be a really useful and helpful tool. When managed well, a credit card can do more than just to help you make purchases. It helps you to build your credit history, which is essential for future financial opportunities in Canada. You can earn rewards and cashback just by using your card for everyday spending. Setting a pre-authorized payment makes it easier to pay bills on time and stay organized. And sometimes credit cards are the only accepted form of payment for certain transactions or security deposits. So the key is really to use your card wisely. Pay your bills on time, keep track of your spending, and enjoy the benefit that comes with responsible credit card use. So thank you so much for spending your time with us today. I hope you found this insights helpful as you start building your financial future in Canada. I'll pass it back to Abe for Q&A.
Great. Thank you so much, Sierra, for that informative presentation. So we will now move to our question period. We've been pulling questions that you've been asking in the chat throughout the presentation, and we also will touch on the questions that were submitted prior to the webinar. So to start, we had a lot of questions, both pre-submitted and in the chat on this one. So I think we should start here. If someone has credit in another country, does that hold any weight in Canada? Is there any way to import that credit, or do you have to start from scratch when you get to Canada?
Yeah, so for the most cases, your credit history or your credit score from your home country generally do not transfer into Canada. In Canada, your credit score is based on your Canadian credit report, and your foreign credit history typically do not automatically transfer to that report.
Great. Okay. And then another pre-submitted question, does checking my credit score affect my credit score? If so, on what interval should I be checking?
So it depends. So it depends on how do you check it and how frequent you check it. So if you are using the tool to, some of the tool that like what we have like to credit card check, if it is a soft inquiry, it doesn't affect your score. And one of the way to track it is I would normally check it on a yearly basis just to make sure there's no weird checks or fluctuations on my credit score. But if you're building your credit, you may want to check slightly more frequent, maybe quarterly, and then you should see an improvement there.
Great. Okay. And then another question that was pre-submitted, how long does it take to build a strong credit score from scratch?
That's a really good question, actually. So it depends. It depends on the type of credit product. For example, your phone bills, all of those, and how often you use it. As I mentioned, if you have a good credit habit, meaning that you do pay your bill on time and you often pay in full, and also like do it for all the credit product that you have, your car loan, your credit card, your phone bill, then it will build a lot faster. So that is really depending on that. So there's no set time frame, but usually when you do that, like you will see like a change in the score over time.
Great. Okay, and then a question from the chat. Someone asks about having multiple credit cards, one that is mostly used and the other that has less usage. How does that impact credit score? Does credit score take into account both credit cards or all of your lines of credit? How does that calculation work?
I don't come from the credit Equifax or TransUnion institution, but then from my understanding, it really depends on how active you have been using that card and for how long. So if you have multiple products, and then I think all of them consider into your credit score. So that's why some people notice that when they close their oldest credit card, even though they don't use it anymore, it does impact the score a little bit. That's the reason why. So the recommendation is like not to have too many, but then do have more in each of the one that, for example, instead of having 1,000 credit card, maybe consider, instead of having two $1,000 credit card, maybe consider having two is having one $2,000 credit card and then use the $2,000 credit card, pay on time, manage it better. And to me, I think that is a better way to manage it and help to drive your score.
Great. Okay, and then one practical question: how does one go about checking your credit score?
Like, how do you check your credit score?
Yeah, how do you know what your credit score is?
So there are many tools that are available today. Like, I think for our bank, we do have like if you have the customer profile with us, you were able to check your credit score with us as well. And on top of that, like there are several like online agency that help you to do that.
Great.
You can you can reach out directly to Equifax or TransUnion to ask about your credit score as well.
Okay. This is maybe a clarifying question on what credit means, but someone in the chat asks, when does one qualify for credit in Canada as a student? So maybe we need to maybe you can speak a little bit to like building credit versus credit as in a credit card and the ability to have a short-term loan. Does that make sense? Do you want me to reread the question?
Qualify for credit card as a student. So it depends on whether you're international students and domestic students. So let's say, assuming that you're coming as like international students, you can actually apply for a credit card, unsecured credit card with us the moment you land in Canada. So you can apply immediately you arrive. We allowed you to apply without any credit history.
Okay, great. Another pre-submitted question. Is a credit card mandatory to build a credit score, or are there other ways to go about building your credit?
Well, credit card is one of the simplest way and the most common way to build credit history, but it's not strictly mandatory. Other credit card or credit account types, such as the phone bill that I mentioned, or utility bills related to report their billing to the bureau, can contribute to your credit history.
Along the same lines of building credit score, someone has asked, how does paying off a loan early affect a score? Is that something that people should be trying to do?
Yeah. So paying off a loan early is generally a positive thing because it removes debt and show responsible behavior. However, depending on the type of loan and reporting, there are a few considerations. The presence of a loan is a good standing over time may help lengthen your credit history. Paying it off early means you lose the future payment history by that loan, though you still benefit from the fact that you used and repaid it credit. Secondly, make sure that the pay in full status is reported correctly and any outstanding balance is zero. You will be able to see that in your credit report. Paying off a high interest or high balance loan may also improve your credit utilization and that loan matrix, which is beneficial. So it means that you have more capability to borrow later on. In summary, paying off the loan early is largely positive, but ensure the account remain reflected as paid or closed in good standing. So that's very important, rather than mistakenly reported as unpaid.
Great. Okay, so someone asks, you touched on this previously, but someone in the chat asks, can someone get a credit card, or how do they go about getting a credit card when they don't currently have a TD bank account?
You can apply for a credit card even though you don't have a checking account with us. That's no problem.
So what would be the step to do that? Should they call in or visit a branch?
So it depends on the customer's residency status. So if you are permanent residents, you can actually have 3 ways to do with this, which is online. You can use Easy Apply to apply for the credit card with us. You can call our phone channel team to do that, or you can visit one of our branches. If you are temp residents, meaning you're part-time workers or international students, then we will encourage you to come to the branch so that we can create a profile and also take a look of your temporary residency status document, such as your work permit or study permit. Those would be very helpful as you apply for a credit card.
Great. So a few questions around this, both in the chat and pre-submitted, around credit utilization. How can people go about balancing increasing their credit limit and just managing credit score and credit utilization? What should the balance be, or what maybe is something that people should be thinking about in terms of managing that balance between how much of the credit they're using and what their limit is, or asking for a higher limit?
So generally, a utilization rate is good to be around in 30% ish. So so I would say that if you were given a high limit, having a higher limit would help to drive that credit score, because your utilization rate is very low. So sorry, does that answer the question?
Yeah, I think that it was a few different questions, so I think that's
Okay.
helpful. Okay, let's see. This is another question on different ways that you can increase credit score. So does being a tenant and paying rent increase credit score?
This is a very interesting question, actually. So paying rent per se does not automatically boost your credit score unless your rent payments are reported to the credit bureau. So there are some services allow rent payment to be reported to the bureau, which can help to build credit, but it really depends and varies by landlord, region, or service used. So in general, it doesn't really report for the most part, but if you are renting through certain agency, they may help to increase the score.
And then you did already speak to this, but maybe if you can just touch on it again, because we've had some questions on this. But what is credit score important for? When is it most often used, and why is it important for newcomers?
For sure. So so when you're looking for in a condo, an apartment for rental, usually the landlord can ask for a credit history or credit score, so that it can be a decision factor for them to determine whether or not to rent the property to you. That's one of the things they do want to consider. Secondly, in the future, if you wanted to have your own home, you want to apply for a mortgage, your credit score, your credit history can help to strengthen your capability to or your trustworthy to secure that loan or mortgage. So that is the second piece. The third one is several employer may also check your credit history to see how trustworthy or how reliable the person is. So therefore, building a credit score can be very important when you live in Canada.
Great. This was also something that you touched on in the presentation, so maybe just you can reiterate it. But someone in the chat asks how to best manage credit card payment. Just any useful tips?
So, so manage it. So there's a few things. So one is you always spend within your limit and your means. So every single credit card has a maximum limit that you can use. If you go over that limit, as I mentioned, there may be some over limit fee and things like that, and it impact your utilization rate. So number one, stay within your limit. Number two, pay off your bill on time every single month. So when you pay off your balance in full, number one, you wouldn't be charged of the interest. Number two, it would help to prove that you're a reliable and trustworthy individual for credit. Number three, the third one is enjoy the benefits of using the credit card because it does have a lot of perks and discounts or sometimes like even travel benefits. So all of those would help to would be helpful in your situation.
Great. We'll just maybe get through a couple of more questions. So this is a pre-submitted question, but also I saw a question around this topic in the chat. So should people be wary if their bank or if a financial institution offers them increased credit, or should they rely on requesting an increase in credit limit themselves?
I would actually choose to accept any pre-approved offer that the bank is offering me. The reason why is because it shows that the bank is seeing that you have a great repayment history and willing to lend you for more to increase your limit. So one, it would help for utilization for any emergency need. You can use that extra limit. Two is like your utilization rate would be further lowered. And third, usually it's not a hard check when someone offers you a limit instead of you applying for it.
Okay, and then we touched on this topic previously about paying off a credit card, but someone asks about the options that their bank gives them of minimum payment and statement balance. Which one should they choose, and what do those mean?
So minimum balance is like, or minimum payment is that like that's the minimum that you need to pay to continue using the card without the card being sent to collection. So, but then, however, as I mentioned, with interest rate will be building up on the unpaid portion, I would highly recommend you to pay as much as you can every single month, if not the full balance. Because every dollar that you owe would actually continue to adds up or multiply over the time. So there are three key balance on the credit card statement. One is the minimum payment. That's the minimum that you need to pay in order to continue using the card. Current balance is what you see today based on everything you spend. And then statement balance is the money that you need to pay, or the balance you need to pay by the deadline or by the due date. Recommending to pay in full by that due date every single month, and you'll be able to continue to build that score for your credit history.
Great. Okay, I think we'll end there. We've gotten through a lot of questions, both pre-submitted and from the chat. So thank you, Sierra, so much for your really informative presentation, but also just for fielding so many questions. I know that this is an important topic and a complicated topic, so I would advise people in the chat, if you are looking for more information, to visit TD's website and also CIC News. We have various articles from TD on this and related topics. So if you'd like to read more, definitely pursue those sites. And thank you so much for joining us. A big thank you to Sierra, and thank you to everybody in the chat. I hope that this was informative, and we hope to see you again in a future webinar.
Thank you. Bye, everyone.
Thanks, everybody.